You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike TOSAW from RCM Asset Management, Andrew the Rock Lobster Giovinazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. The Option Block is brought to you by NASDAQ. From its inception, NASDAQ has been an innovator and agent of change in the financial markets. It's in our DNA. From the development of electronic trading to our drive to bring enhanced functionality and world-leading technology to our suite of 6 options exchanges, we exemplify customer focus, consistent technology, and streamlined solutions. Now NASDAQ is proud to launch the NASDAQ 100 Volatility Index, ticker symbol VOLQ, to its suite of exchange indexes. VOLQ uses only at-the-money options to provide a precise measure of NASDAQ 100 volatility. Learn more about this exciting new volatility product at www.nasdaq.com/VOLQ. NASDAQ, leading the U.S. options market and continually rewriting tomorrow. And now, get ready to hit the Option Block.
All right, everybody. That music means it is time once again for a little program around these parts we like to call the Option Block, your bi-weekly source for all things options related. That also means it is time to kick off our broadcast week here on the old Options Insider Radio Network. You know, if you've been listening for a little while, we like to do things a little bit different here to kick off the broadcast week. Certainly a segment you guys seem to have coalesced around. You guys like it. You're always sending in your submissions for a way to get our blood pumping, get our brains moving a little bit here to kick off the week. So without further ado, let's get right to it. Let's see if you guys can name that tune. All right. I think we get the sense of it. That's a fun one to kind of kick off the weeks there. And I got to admit, a show I haven't thought about in a while, but when that came across our docket, and I forgot who suggested that one here, but credit to you, whoever it was, that's a good one. So let's go around the horn and see, first off, who we're joined by this week, and then we'll see also if they can name that tune. Let's start way down deep in the heart of Texas. We are joined once again by the greasiest meatballs, Mr. Mark Sebastian from OptionPit.com by way of Carmen Lion Capital. Mr. Meatball, A, welcome back to the program on this auspicious Monday. And then B, can you name that show/tune, sir?
Yeah, it's good to be here. And, I was sitting here thinking, at first I went like St. Elsewhere, but I know that's not St. Elsewhere. But it sounds like some sort of hospital or lawyer show, maybe like a Scarecrow and Mrs. King, but I don't think it's that one either.
Ooh, that's a good one for a future show. I'm going to put that in the back pocket now. I forgot about that show.
It's some sort of hour-long drama. This was not I don't think this was for a sitcom.
Not a sitcom. I will give you that. All right, but you are not correct. But I do like the Scarecrow and Mrs. King. That's good. That may have to go into, not for next week, obviously, but maybe for a future rotation. Now we rotate out to a quiet hamlet outside of Chicago known as St. Charles, where we were joined once again by the uncleest of Mikes, Mr. Uncle Mike TOSAW from St. Charles Wealth Management. Also, the reigning, defending champion right now of our Name That Tune/So segment. Mr. Uncle Mike, A, welcome back to the program. And B, can you name that tune, sir?
Good to be here, as per usual. I really don't know that one. I agree with Mark. It does sound like an hour-long drama. So, yeah, I'm stumped. I got to say, I am clueless on this one.
Oh, we've stumped Uncle Mike. 0 for 2 here so far. Let's go now out to the NASDAQ hot seat, where we are joined by a newcomer to this program, even though he's been on our TWIFO program once or twice, or quite a few times, actually. He's Mr. Tim McCourt, the Managing Director and Global Head of Equity Products over there at CME Group. Mr. Tim, welcome to the Option Block program. A, and B, can you name that tune, sir?
I cannot name it, but I did hear it. No guess.
Uh-oh, we are 0 for 3 today. We stumped you. Actually, I thought that would be an easy one. That's Macgyver.
Oh, that's what it is.
Yeah. It's one of those ones that's familiar and yet not. You're right. It's kind of like, oh, I know that, but what do I know that from? Which is why it is fun. And you know what else is fun? It's the interview block. So let's get to it.
The interview block.
All right, everybody. I love that drop. We don't get to use it as often as I'd like here on this program. But, of course, welcome to the interview block, the portion of the show where we actually welcome on guests and proceed to pick their brains for the benefit of you guys out there in the listening audience. And like I mentioned, we're joined today, interestingly enough, in the NASDAQ hot seat by an old friend from CME, which is also fun. But, Tim, like I mentioned, you've been on TWIFO a number of times, but never been on the option blocks. Maybe let's start, as we do with all of our first-timers, give our audience a quick overview of your background in the space, as well as what it is you do day to day. What does the Global Head of Equity Products do over there at CME?
Sure, Mark, and thanks for having me on this show. Looking forward to today's chat. For those of you who haven't heard me on TWIFO, my name is Tim McCourt. I'm the Global Head of Equity Index and Alternative Investment Products at STNE Group. And what that means is my team looks after all the global equity index benchmarks in terms of futures and options on futures on things like the S&P 500, the NASDAQ, the Dow, the Russell 2, the recently launched VOLQ, micro futures, micro options. And under the alternative umbrella, we also look after things like commodity indices, cryptocurrency, and soon-to-be water futures. So keeping the team busy over at CME and really looking forward to being in the NASDAQ hot seat today, mixing it up.
They're going to add water to your purview as well, so you didn't have enough esoteric products with crypto. They're throwing water under your rubric as well there, Tim?
That's right. December 7th, we'll be launching water futures on the NASDAQ Velas California Water Index with our friends over at NASDAQ as well. So both the CME and NASDAQ teams have been quite busy the last few months on the product development front.
Yeah, a lot of joint ventures. Maybe let's start there, because a lot of our listeners, maybe who missed your appearance on TWIFO, may be wondering, how did a CME head of equity products get into the NASDAQ hot seat? So maybe give us a quick overview there as well. How did this joint venture, this joint product come to pass, sir?
Yeah, it's a great question. So when we look at CME and NASDAQ's partnership and relationship, it goes back several decades, where we launched E-mini NASDAQ 100 futures, and we used to have NASDAQ futures back in the pits. Back in the 90s, and then with the electronic trading in the early 2000s. So it's been a multi-decade relationship between CME and NASDAQ. And back in 2018, we announced a commitment for the long term to that partnership for the next decade, so to speak. And the teams have really been working together to figure out how we could combine the acumen of both firms, CME building the futures market and NASDAQ being one of the world-class leading index providers, and how we can make great products and risk management tools for our partners. And I think when we look at things like VOLQ, which is the Volatility Index, or water futures on the NQH2O Index, these are really just great examples of what our teams can do when we work together to bring exciting new risk management tools to the market for all of our customers. It's been a lot of fun, and hope the next decade is as good as the last few with our friends over at NASDAQ.
Well, it's certainly been an interesting and indeed perhaps an auspicious time to launch a vol product. We've talked in the past about how much vol we've seen in the broad marketplace. Of course, all of 2020 has been an extraordinarily volatile year. Go all the way back to the beginning of January, where we saw some tensions in the Middle East. Pre-pandemic, we saw some vol creeping in there. Then, of course, we all know what happened in February into March and indeed beyond. And, of course, we're just coming on the heels of the big election, which was also an enormous volatility event for a broad cross-section of products, not just equities, just about every major asset you can think of had some election juice built into it. So I'm curious, Tim, for you guys at CME, and maybe for your NASDAQ counterparts over there as well, talking with them, was there any trepidation about getting into this vol market in a crazy, turbulent year like 2020? Was there ever any thought, hey, maybe we should kick this down the road maybe to what is hopefully a more tranquil year like 2021? Or was it the flip side, hey, this is a great opportunity. People are trading vol. Vol is moving. People are talking about vol. Even your one-lot Robinhood person is suddenly cognizant of what the heck volatility and VIX are. This is conversely maybe a good time to get into that space. How did that conversation unfold, Tim?
That's a good question. And like many product development life cycles at CME Group, what's really important to us is customer and market validation. So even though we were working with the team at NASDAQ, since our renewal of the license agreement in 2018 around how to bring this index and this product to market, being the futures contract on VOLQ, it really was that the customers needed a risk management tool that specifically addressed the volatility associated with the NASDAQ 100. The NASDAQ 100 index is a tremendously popular index when you look at the tradable products in the entirety of the ecosystem, not even just the futures or options market at CME, but if you look at the cash index options that trade on the NASDAQ exchanges, the options on futures at CME, the E-mini and micro E-minis, there's lots of trading that exists in the NASDAQ 100 because it's one of the leading global equity index benchmarks. And it displays a different volatility, personality, or profile than something like the VIX or something that's based on the S&P 500 because the index itself is different. While it has some overlapping constituents, a lot of overlapping constituents, they have different weights between the S&P and the NASDAQ 100. And as we've seen in 2020, very different price return profiles are available in the indices as well. So there was always this need and this interest to more precisely hedge and access NASDAQ 100 related volatility. And that was the driving force, was how do we methodically and prudently design this futures contract with our partners at NASDAQ? How do we introduce this to the market? And while certainly 2020 has been an interesting year from a volatility profile and backdrop, it wasn't necessarily something we considered with respect to timing. It's something that we wanted to get into the marketplace. I think 2020 has perhaps shown a new light on how it could help manage risk in people's portfolio or how it could give them slightly different exposure or access to the market through just the volatility lens. But we didn't necessarily think about deferring to 2021 or not launching the contract. Because I think one of the things that 2020 has shown us is we necessarily can't predict the future. I don't think we necessarily at end of 2019 or even, Mark, as you said, in January and February, we're expecting a 2020 to look like this. So it's just really important that we continue to work with clients, make sure they're educated on the product, make sure they're ready for the product, and introduce it when they're ready for it. And that was something that we heard loud and clear, not only through 2019, but in the run-up to launch in 2020, that customers are ready for this. It's something that's going to be additive to their risk management trading portfolios. And that was really our focus. It's tough to time product launches, in conjunction with the market. So it's really important that we do what's best for our customers. And the feedback so far has been great from them with respect to how the launch is going.
Let's talk about the education and that differentiation of the product out there, because the NASDAQ folks have been on here a number of times, and they're very excited about the fact that this is effectively, your old school straddle run brought to life in a product. Down on the pits, people would ask for straddle runs, and it was effectively just at the money straddles across the board in all the different months. And that was effectively your snapshot of what's going on the vol surface in a product. Out there in VIX land and other products, they like to add different nuances to it. They add the skews. And the NASDAQ folks are saying, no, we're going back to this kind of old school straddle run. I like to call it the just the facts, ma'am type mentality, but there's no other nuances in there that may be adding value or perhaps obscuring it, depending on your viewpoint out there. So I'm curious out there, Tim, as you're talking to clients and customers, was this a segment that they were asking for? Were they coming to you saying, hey, you know what? These nuances around the skew impacting the calculation, particularly around settlement, these are things I don't really want to deal with anymore. Or maybe was there something that excited you and the team over there at CME to say, hey, we can get something that's a little bit more straightforward, a little bit more easy for people to understand in these turbulent times?
Yeah, that's absolutely correct, Mark. And I think first and foremost is, Dan and the team at NASDAQ always like to say, it's all about education at this stage, and we have great resources on CMEgroup.com, and NASDAQ has great resources about the index on their site. So I would suggest that everyone does their own homework and research the index and how it works. But the feedback that we got from folks was, to your point, is that the at-the-money nature of VOLQ is a distinguishing feature that customers really want. It better aligns with and comports with how the market thinks about volatility. Mark, kind of buttressing your example from back in the day in the pits. The at-the-money, the straddles, this is where people think about volatility. This is how they talk about volatility. So the fact that it's a precisely at-the-money option and will always be a precisely at-the-money option in terms of the measure of volatility that the VOLQ is referencing and calculating is of great importance and value to the market. And how they do that, it also then translates into, I think, a little bit of operational ease. The VOLQ is based on 32 options. It will always be the first and second in the money and out of the money puts and calls across the nearest 4 weekly expirations with respect to the cash index options that trade on the NASDAQ 100. So other than just the proximity change of what those first 2 in the money and out of the money options are with respect to the moneyness of where the at the money is trading, it will always be 32 options in that basket. It's a little bit more straightforward in terms of talking about volatility with respect to at the money. We're not dealing with some of those skew parameters or some of kind of where other indices track things a little bit further down away from the money. So it just matches with what people are thinking. It's very clear to understand what the at the money volatility is doing when you then look at how it's negatively or inversely correlated to the NASDAQ 100 index itself. These things move together. I think it's just very easy and intuitive for folks to understand, and that was the feedback. And I think that's what's great about the methodology. It is just a way that it's done in a way that aligns to the way that people think about it, and more importantly, the way that people want to trade the volatility around the NASDAQ 100.
Let's talk about that trading really quick. I know they just launched a little over a month ago, so it's still early days, but what kind of numbers are you seeing? How has the early response to the futures been, Tim?
Yeah, the response has been great. I think launching any new product is always difficult and can be a challenge. So when we look at the first key milestones, we've had a very solid two-way screen on Globex for customers to trade. We've had trades in every contract and every maturity. We've gone through the October expiration where the final settlement, which is available by looking at VOLS, effectively index would be the settlement price on that Wednesday back in October, that third Wednesday back in October. And going through that, having open interest expire in the final settlement, having kind of the front month contract come off, and then we added January 21 contract. These are all things operationally that make sure the things are going well. The market has also continued to get a little bit tighter here, which is great to see. I think understandably so, it was a bit wider around the election, not necessarily surprising there, but post-election, we've seen that this front month contract, the November contract is, I think right now it's about 70 or 8, 0.7 or 0.8 points wide. So just a few ticks wide, few contracts up. So it's been great to see. The other thing that I'm really proud of, for lack of a better word, is when we look at the futures contract, is it really has established a nice basis to the cash index. So as the index is being calculated with respect to the off of the option prices, we see these things moving in tandem. There's been an orderly and kind of consistent basis between the cash index and the futures market. If we look at I think it was the Friday or right before the election earlier this month, end of October, I think right maybe on the 30th, the VOLQ kind of peaked out almost at the 40 handle. It was 39 and change. It's kind of come in since then. where we're seeing now futures today, right now they're 25 and 25.7. And that's been an orderly kind of coming in of vol, and we've seen the futures market and the index level do so, again, in a nice basis, which is a great sign for an early futures contract to have that present itself so early and maintain it as the index is moving. We haven't seen that basis break down, and we're continuing just to work with customers on educating them, getting them into the product, and continuing just to work with folks on onboard them into the product. And it's been a lot of fun. And I know the folks at NASDAQ are also out there with us helping educate people on the index, and we're focusing on the futures. And it's been a lot of fun, and we're glad to see where it is a few weeks here post-launch.
Speaking of fun, we have to keep rolling with some other fun segments. But before we do, Tim, I know our audience is probably already hitting us up as we speak. I haven't checked in the live yet, but I'm sure they're wondering, the futures are great. When are we going to get the options? So, Tim, I put it to you yet again, sir. Do you have any insight on when we might see the options on VOLQ, sir?
Right now, no kind of plans for options on futures. We're just focusing right now on building the futures market, which is always key for us. And futures kind of is the leader of the pack, so to speak, right? Where we'll build the futures liquidity, and then NASDAQ will work on introducing cash index options. Down the road, CME may look to introduce options on futures. But it's really important to us to make sure that we have a robust futures market first, so people can hedge all that option risk that gets presented when trading options. But like all other things at CME, we're all ears for customer feedback and customer input into what we should be focusing next. So keep those questions coming, because the more questions we get, the clearer that demand is, which is always useful for us when developing products.
Well, leave it to our audience. They're always going to want to know when the options are coming. So the more info on that, the merrier there, Tim. And it's more the merrier for this show, too, as we keep on rolling right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, let's get to it. A weird, a wild, a woolly start to the week yet again out here. I feel like I've seen this movie before. I feel like we've done this dance before. Of course, the news of rising hospitalizations, the field hospitals going out in major cities, again, massive wave of infections. And yet here we are, also green across the board in the markets. We've done this dance once or twice before in 2020. Of course, the difference now being, of course, we have yet more vaccine news on the back. So if you didn't like the 90% from some of the earlier vaccine trials, or perhaps Russia chiming in there saying, oh, wait, our vaccine is 92% effective. Now we have a Moderna coming out this morning saying 94% effective in their trial. So that's all good news. So, of course, longer term, we hope that's a ray of sunshine on the board. Certainly the market is pricing things like this coronavirus, a distant memory coming into showtime, even as of a few minutes ago. So the Dow up well north of 1%, about 1.15%. The S&P up around 0.75%. NASDAQ playing the rear laggard role out there today, up about 0.4%. And all of our friends out there in the vol space, given this just joyous start to the week, all taking a bit of a break from our last show. VIX come into showtime was at about 23.25, puts it down about exactly 2 points from our last show. VVIX, a.k.a. the volatility of volatility, at about a 113, puts it down about 4 points. VXX, the products you guys love to fade out there. Well, it's feeling the fade right now, about 18.75 coming into the show, puts it down about exactly a point from last show. And VOLQ, the newest addition to the vol suite out there, at about a 24, puts it down a little over 2 points, about 2.25 points out there. So a lot to unpack. Let's go around the horn. Let's start in the most tranquil and optimistic of hinterlands of Chicago. We know Uncle Mike is enjoying this day because it's an Uncle Mike type of day. Mr. Uncle Mike, sir, what is lighting up your day on this sea of green on the screen, sir?
I think that the big news of the day, of course, is the vaccine. This almost feels like an instant replay of last Monday when the markets rallied.
We have seen this movie before, yes.
Yeah, that's what it feels. The difference is now it's just that last Monday it was 90%. This Monday it's 94%. And last Monday the markets rallied and then fell off towards the end of the day. So it'll be interesting to see if we can hold this rally for the next couple hours into the close. So I think that's the big news on the day. Things lighten up my tape. Energy is up very significantly today. XLE is up $1.80 on the day, which is nothing small by any means. And financials are up a pretty good amount as well, over 1.5%, looking at XLF. So those are the leaders that are going on in the market right now. And in terms of bonds are relatively flat on the day. And commodities, silver, that is not flat. It's up slightly on the day, being up just a few pennies. But overall, I think that's the news of the day is potential 94% vaccine. But with that, what's just going to be interesting is when will technology jump on board with that? Not that technology, companies like Netflix or Facebook, they don't really benefit from, I shouldn't say they don't benefit. They're not going to benefit as much as like a restaurant would on having a vaccine. So with that, we do have other leaders that are happening in this marketplace. So with that, it'll be interesting to see if and when technology does jump on board to a vaccine rally. And then if we pull back, will technology step in? Will buyers come in the technology space to hold the market up overall? So it's going to be interesting these next couple hours in the marketplace, just because of the fact that over the course of the last couple hours, we have been trending downward. We're still up on the day, of course, but since probably about 2 hours or so, we've actually been trending down over the course of the last couple hours. So we'll see what the market can hold. We're right around the 3,600 mark in the S&P 500, and so that's let's lighten up my tape right now.
All right, now let's turn our attention back down south, deep in the heart of Texas once again. For the greasiest of meatballs, Mr. Mark Sebastian. Mr. Meatball, sir, A, what is lighting up your tape? A lot of vol on the tape out there. And this is also usually where I ask you, what the crazies in your pit chat are up to. But I'm more curious these days. You're hanging out with a lot of Robinhood folks out there. So what are the Robinhood one-lot lovers? What are they up to out there, sir?
Yeah, today what we're watching is continuation of the stay-at-home trade unwind. So I would not be surprised if we see the Dow strong through the rest of the day. And the NASDAQ, the QQQ, consistently weaker here because, while there are some names that, I think long-term you're not going to lose on owning Google or Facebook or any of those names. But in the short term, Amazon is a loser and Nordstrom is a winner on the stay-at-home trade. Thus, you see Amazon's relatively soft, JWN up a lot, Macy's is up. A lot of the go to the mall trade is winning. And then other names where people are losing, you've got names like DraftKings down and the actual casinos where you can go and visit and be in a sports book up. And so it's the unwind of the stay-at-home trade. I think a long-term trade, a trade that I am setting up for, middle of 2021 is the travel revitalization. So I'm loving, longer dated trades in the airlines, in names like MGM or Caesars, some of the hotel names, some of the restaurant groups, although I will never, ever invest in Darden's ever. And if they own Olive Garden, for those of you that don't know. But I think some restaurant groups. Now, in terms of Robinhood, we are seeing some crazy volume in a $3.50 stock, Fuel Cell, FCEL. And this is one that we've been on board with for a while. The first trade we did on Little John was the 2.5 calls that expire in December for 28 cents. Those have tripled. And then today we're looking at the volume on the FCEL 3.5 calls expiring on Friday is absolutely bananas insane. That one is really interesting. Now, the hottest name in Robinhood was NIO, NIO. On Friday, NIO traded 3.5 million contracts. Think about that. NIO out-traded the SPY. It out-traded the SPX. It out-traded Apple by 3-1.
It out-traded Apple and Tesla combined. Think about that.
Apple, Tesla, SPY. I mean, all of them, right? So but now today we're seeing sinking volume, sinking volatility. The company has earnings tomorrow. When you see sinking volume and sinking volatility on a name like NIO, that is a sign
the gamma feedback loop, what we call the Robinhood feedback loop, in a name in some of these super hot stocks is starting to come to an end. Now, could earnings refire that? Yes. But if there was not earnings tomorrow, all right, I would be all over puts in this name because I think that there is a huge bearish setup in this name building. What's interesting is that NIO actually uses an Apple app for its battery exchanges, and Apple has yet to really participate in the NIO trade. But so NIO, it's still trading a lot, but it is nowhere near where it was Thursday or Friday. And keep an eye on FCEL. That looks like it wants to go much higher. And then another name that looks like it wants to go much higher is Plug Power. So we're on this battery kick. And then the final trade, the final Robinhooders got this one wrong, was the SPCE. So that is, Robinhooders got on the wrong rocket company. SpaceX was the winner, and SPCE so far not participating on the upside. It looked like it wanted to get that big pop, but that was one where the Robinhooders were wrong.
Interesting what those folks are up to out there. Let's see what the market is up to now in terms of overall volume, what you folks are trading out there, starting the major indices. VIX doing decent paper right now at about 388,000 contracts as of a few minutes ago. The ADV closing in on 600K, 581. If you've been listening to the show for at least a couple of months, not too long ago, a couple months ago, it was threatening to break 300,000 in the wrong direction. So a decided uptick in ADV for VIX options out there. SPY doing pretty robust paper as well at about 2.6 million. That's north of half of its ADV, which is about 4.1 million or so. The S at about 650,000 contracts, ADV about 1.1 million. So closer to half of its ADV out there. The Qs, 427,000 contracts. The ADV, 1.06 million. So maybe the fact that the NASDAQ is lagging a little bit today, perhaps to explain why it hasn't even done half of its ADV yet. And the small caps on fire today, 463,000 contracts. The ADV, 633. So that ADV has ticked up quite a bit, and yet they're doing a substantial portion of it already out there. So some action out there in IWM. Let's move on out to the single names. Now, we talked earlier about how NIO eclipsed almost everything else combined out there, which is just on a volume perspective completely absurd. And yet that's kind of what we saw. Let's see if we see a repeat of that today with our top 10 most actives. By the way, it is a very active day. It cost you 223,000 contracts to break into the top 10. That gets you all the way to Micron, number 10. Number 9, AMD, always lurking somewhere in that top 10. At number 9 today for 228. Number 8, Pfizer, I wonder why, 272,000 contracts on the tape. Number 7, American Airlines, another perennial top 10er of late, 306,000 contracts. Number 6, get this, listeners, Tesla. Oh, how the mighty have fallen all the way down to number 6 for 371,000 contracts. Then we get to number 5, CCL, not Creedence Clearwater Revival. That'd be cool. It'd also require an R instead of an L. No, this is Carnival with about 417,000 contracts. Number 4, our friends across the street here, Boeing, 475,000 contracts. Number 3, GE, 510,000 contracts for GE listeners. We're getting up there today. Number 2, NIO, 722,000 contracts out there. So can't quite do it today. Still just an impressive amount of paper, 722. That means number 1, back in its old throne, its crown restored. It is Apple, 857,000 contracts on the tape. Let's look really quickly here for some earnings. There are a lot of them still popping off this week. So if you said, earnings is done, no way. Not by a long shot. So you got tomorrow Walmart, Home Depot, and Kohl's. And a little name you may have heard of called NIO popping off tomorrow. So we'll see. Who knows how many millions of contracts. If it can do that much on just a random day last week, let's see what the hell it can do on its actual earnings day. I'm kind of scared to see the numbers. Target on Wednesday, Lowe's and NVIDIA. Big on the graphics side, of course, also making some interesting M&A plays out there on the chip space. Thursday, Macy's and Intuit. And Friday, we got Foot Locker. You guys want all those reports for yourselves. You know where to go, theoptionsinsider.com. Get them all for free. Can't beat the price. As we head right on into a real quick visit in the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, welcome to the Odd Block, the portion of the show where we get weird, we get wild, we unleash our Eye of Sauron, see what it brings back to us. And first thing it brought back to us is a pretty sizable trade out here, and a name we haven't really talked about in the Odd Block too often in the past. This is Aflac. Of course, you know them, the insurance duck on all of the commercials out there. Ticker symbol AFL. This is the name. They're trading 42 3/4 right now, up about $1.25 or 3%. So a good day for them out there. A year ago, they were trading a wee bit north of it. They were trading about 54.39. So a little bit north of where they are right now. They kind of hovered at that level for a while, as you probably would expect for an insurance company, not the most exciting or sexiest of names out there. Then, of course, they took it on the chin. They got down to 23.07 in the big sell-off in March. But this one almost immediately rebounded. By March 25th, they're trading 36.73 again, so they got a good chunk of their value back. And they kind of hovered in that level for a while. And then they topped out. I bet you can guess when they topped out, listeners. Yes, if you said June 8th, you are correct. 42.10. They pretty much sold off from there again and never really threatened those levels of 42 and change again until pretty much today. Breaking through it again today, getting a nice surge out there. So let's see what our Eye of Sauron found out here. And it's a pretty sizable print, actually. It was two legs. It was the Feb 30 puts going up for 30 cents, so lifting the offer 18,900 times. And also going up at the same time against it, the Feb 47 halves going up on the bid for 80 cents, 18,900 times as well. So speaking of Aflac, it looks like a duck and quacks like a duck. It has all the vibes here of someone putting on a collar. And obviously, because they're putting the put a little bit farther down and the call a little bit farther out, they're actually collecting a bit of a credit due. Looks like about 50 cents. So we started looking into this saying, oh, that's an interesting print. Let's see if there's more afoot here. And sure enough, it seems like there is. Looks like this guy, whoever this is out here, has been collaring Aflac and doing it for size. Obviously, with the size of their options, they have close to 2 million shares out. So at least that's what they're hedging out here in terms of Aflac. So a pretty sizable position. And it looks like this Feb collar was actually rolled from November when he had the Nov 30 42 half collar on. And he opened that again. We dug a little bit further. We found out he opened that again back on August 11th. So he opened the Nov collar in August, and now he's rolling out to February here in November. Kind of hard to argue with the roll. I mean, it's already at his strike. Clearly, this guy does not want to dump 2 million shares or close to it of Aflac out here, so he's going to roll to the upside. Hence, his getting himself a little bit more wiggle room here, going from the 42 half strike to the 47 half strike on the upside, keeping that downside the same, keeping that 30 strike the same, which is interesting. He's kept his protection line the same, even as he's continued to give himself more upside. Worth noting, he did it back on August 11th initially when the stock was $38. And he got a credit then as well. He got a 15-cent credit. So obviously that's also playing into his strike selection. This guy obviously likes to put these collars on for a credit. He took it off today, though, in the opposite direction. He took it off for a 60-cent debit. So that debit he paid here is going to go all into, that's going to eat up pretty much the credit he got for the Feb collar here. So interesting stuff out here. Looks like someone has been collaring, and if we had time to go back and look, I'm guessing he probably has been collaring it maybe even earlier than that. Given how the stock has performed pretty much since March, that hasn't been a bad play. The stock has been kind of range bound, so you're able to get some decent collar levels off, and then when it threatens the upside, he rolls it. Mr. Meatball, what are your thoughts here on someone looks like putting on a pretty sizable collar here in Aflac and then rolling it, and have been rolling it for some time, and when it gets to the upside, keeping the protection level the same, and when it gets to the upside, just rolling that call leg up a few handles, sir?
Yeah, I mean, it looks like somebody who has a stock position they don't want to lose, but also has a level where they want to get out of it. And so I don't blame them, and I understand the strategy makes a lot of sense. Someone's trying to avoid some tax consequences on the upside, and then they are hedging their downside.
At some point, he's going to have to roll up that 30 strike. We'll see if he does that in his next leg or so. But for now, he's maintaining that 30 put there, that 30 strike. We have a couple more. I'm not going to have time for those today. I'll just run through them really quickly. First off, we have Stone Cold Inc. That would be cool if that was it, but no, it's StoneCo Inc. This is a Brazilian name, actually. Ticker symbol STNE. Looks like we have a size override of the NOV 70s going up about 13,000 times on the bid for 35 cents. They're also a very active one today. Oretz noted them in their active option scans as well. They're number 2 on their overall list. Remember, they look at today's volume versus a rolling 20-day average, and that's how they rank their names. And so Stone Cold, I'm going to call it because it just sounds more fun, is number 2. And speaking of sounds fun, we also have 2uinc.com, ticker symbol TWOU, so 2U. This is an educational company educational technology company that works with nonprofit colleges and universities to offer online degree programs. 2U Inc., ticker symbol TWOW. Trading 32.32, and we also saw out there, looks like the DEES 25 puts going up for 22 cents, kind of mid-market. That was nickel at 50 cents. That's kind of market you would expect in a name that's probably not that actively traded. So you know what? We're going to come back to these and watch these because we don't have time to really do them justice now. We'll come back to 2U just because I like saying that as well. But of course, it's Monday. It is time to unleash Uncle Mike. It is time for the strategy block.
It's time to dispense options, wit, wisdom, and education. It's time for the strategy block.
All right, everybody. You know what time it is. It's Monday. It's time for Uncle Mike to come on down with his stone tablets in hand to dispense some options, wit, and or wisdom. Mr. Uncle Mike, it certainly is an Uncle Mike type of day out there. What do you have in store for us today? Wit, wisdom, or perhaps both?
I try and do both as often as I can, but let's see how it goes today. So let's say that you have a stock that's increased in value. And right now, let's say you still consider this a higher volatility market. Whether it is or not remains to be seen. Of course, vol is low if you think it's low. Vol is high if you think it's high, according to the Viceroy, words that have stuck with me throughout my entire career. But with that being said, let's say that you're looking to buy a put option on a stock that you have, that maybe it's run up a little bit, and you don't want to sell it as of yet, but maybe you want to buy some protection on it. Well, oftentimes, if that's the case, if you're looking at it, you're thinking, well, I don't want to pay that much money to protect this right now. I might as well just sell the stock. But you're looking at it, you're like, well, this thing could pull back a little bit, but I'm thinking it could still continue. Well, what I would recommend you take a look at would be a vertical put spread. Now, this is a simple strategy that we've talked about on this show at least 6 million times in the 10 or so years we've been doing this show. But I really want to emphasize the importance of it in a market like this. I had a client call me recently, and one of her stocks was, it had appreciated fairly significantly. And what we decided to do is that she doesn't want to sell the stock. Tax implications are involved with that. But on the flip side, the put options were just far too expensive in both of our opinions to simply buy a put. So what we ended up doing was buying a put spread. And so by doing that, if you buy a put spread, you can usually go a little bit tighter to where the money is or where the current price of the underlying is, just because of the fact that the cost won't be quite as much. And by selling a put underneath it, yeah, you're limiting your protection. However, if you have a mentality to where if I like the stock at 60, I love it at 55, meaning you're willing to continue to own it at 60, but if it were to go to 55, you like it even more. If it's that type of a thing, then a put spread might be the right fit for you as a hedging outlet. Now, once again, have an understanding that if the stock goes from 60 down to 20, that $5 put spread's not going to do you that much good. But if you're concerned about a minor pullback and you really don't want volatility to be quite as much of a factor, and you don't want time decay to be quite as much of a factor, I'd recommend considering a put spread. Now, time frame, that's of course up to you as an individual investor, but if you have a more short-term time horizon, then you can go a little bit more short-term with it. If you have a more longer-term time horizon, you can go a little bit more long-term. That's the beauty of options. You have choices. So for today, I know this one's rather quick, but I think that if you have stocks that have appreciated and you're a little bit concerned, thinking, okay, maybe last Monday the market, it went up, but it went down right away the same day, I would consider a vertical put spread.
There you go. Well said. We'll see. We got a minute or two here. Let's see if we can consider some questions from the audience in a real quick version of the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody, welcome to the Mail Block, the portion of the show where you guys take the reins, your questions, your comments. We got a bunch of you lined up here for questions, but if you ask questions live, we try to bump you up to the top of the list, just like our friend here in the live chat, my boy Luigi. I recognize that name. He's been in there before. My boy Luigi wants to know, this one's right up your alley, Mr. Meatball. This is a question you may enjoy or may offend you. Maybe a little bit of both. He says, good morning, y'all. Have a question. The VIX is a representation of VIX cash, correct? So is the fair gauge representing a dollar value or a percentage? Mr. Meatball, if I didn't know better, I would say you submitted this question to our live chat. 'Cause I know this is one of your favorite bugbears, your favorite sticking points when people talk about the VIX cash and the fact that it is a percent of a percent, and you quote percents out there. I know it drives you mad. Clearly, it's also confusing to some folks, so why don't you break it down here for my boy Luigi and everyone else who is confused about VIX cash as a percent? Oh, what's going on there, sir? Here we go. I get him a good question in the mail block, and he has lost his connection out there. All right, let's see if we can get him back, because I know he has he has thoughts on this topic. Uncle Mike, though, I know you like weighing in. You just weighed in on your vertical put spread. If you want to weigh in really quickly here for everyone's favorite, my boy Luigi here, about VIX cash. What are we talking about here from a dollar value versus percent standpoint? Have at it, sir.
I like to keep it simple because I don't really trade the VIX like Mark does. What Mark's doing is he's trading various products that he believes are going to track the VIX or not track the VIX in certain ways. Of course, he's going to do a lot more with VOLQ at this stage. But for me personally, I just quote it as the VIX is trading right now at 23.62, and that's I like to keep it simple. And whether you want to count it in points, percent of a percent, whatever the case may be, it really doesn't matter to me personally. But I can see where Mark's coming from, and that's the world with which he lives. So more power to him. And the fun part is, Mark, is that when you want to mess with him and you quote it in the way that you do, makes for some great radio.
It does. I do believe we have him back there. Mr. Meatball, I don't want to jump off this question till I give you a chance to weigh in on it, because I know this is one of your favorite / least favorite topics of all time. So if you are there, sir, if you can hear me, what are your thoughts here from my boy Luigi, sir? Maybe your favorite question of all time.
It is representing a percentage, not a dollar value. The futures represent a dollar value. The index itself represents a percentage. It is a percentage of the expected move out of the market based on a swath of options. Of a move is the at the money.
There you go. I'm losing Mark a little bit, but yeah, effectively, that's why you hear me, my boy Luigi, on the show. I don't say VIX is at X dollars or anything like that. I say it moved 2 points or 2 handles out there. I know it's confusing because you see all the other stocks out there, and the VIX is quoted right alongside it with all these outlets who don't really understand what it is they're quoting. That's why I always tease the Meatball, because he hates it when people say VIX is up about 10% and it's a percent of a percent, and it gets very confusing. But yes, it is effectively quoting what is a vol percentage out there. A little bit different than when you see Apple trading at X dollars or NIO, all these other things. Those are dollar values. VIX, a little bit of a different beast. I can see why it is sometimes confusing. As we keep on rolling into our final segment, it is time to go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, welcome to Around the Block, the portion of the show where we explore what we're watching on our trading screens until the next time we can all gather here together. Let's start with you, Mr. Uncle Mike, sir. Obviously, an Uncle Mike type of day. What do you have on your radar until we gather here together on Thursday?
Well, just watching 3,600 in the SPX. We held it about a few minutes ago when it went down. So watching that, continuing to watch the Corona numbers that exist. I still don't think it's going to be a major factor on the market, but still watching them nonetheless. And I guess watching that, and we still haven't heard a concession from our president. So although I still think the odds of him staying in office are very slim, if any, we still have that to keep an eye on as well. I think it's funny, he thought he was doing a great thing by bringing Big Ten football back, but Ohio people liked it because Ohio State was going to win, but I think he lost Michigan because of it, because Michigan people knew how bad their team was going to be this year, and so that's probably why they voted against him. They didn't want to have football this year, apparently. So anyway, that is what I'm watching.
There you go. Your football indicator. It giveth and it taketh away. All right, Mr. Meatball there. Can you hear me? A, sir. I know you're having the connectivity down there and deep in the heart of Texas kind of week today. And then B, sir, if so, what are you keeping an eye on for the rest of the week?
I don't know who called Austin a technology hub, but right now my internet's not that great. I'm watching, I think NIO earnings are going to be really fascinating. I'm watching the stay-at-home trade. How does it play out, and how does the return to normalcy trade work out over the next few days, weeks, and months? But yeah, we have a ton of earnings, and the most active equity, the most random active equity ever, NIO, reports tomorrow, and that's one that's hard to ignore, and then. Again, the sector rotation, what's going to happen, right? XLE is up 5.5%, financials, industrials, and then meanwhile, I think that we could see the Qs go negative today. So I think there's a lot to unpack in this market.
I like that. The most random active equity ever certainly is an apt description for the name known as NIO. Unfortunately, listeners, that music means we come to the end of our hour-long sojourn. See, Tim, I told you an hour was going to fly by when we started the show. But before we go, let's go back around the horn. Let's start in the NASDAQ hot seat to go out to the land, actually, of CME. Tim, you kind of just hinted at it at the top of the show. You have water coming under your domain pretty soon. You got the micro options that have kind of been lighting up, as well as the futures. You even got a little thing called crypto under your domain over there. So you want to leave our audience with any cool hints or teases of what's coming down the pike from you and your many and varied product teams over there at CME. Now is the time, sir. The floor is yours.
Yeah, thanks, Morgan. This is a great show. Happy to be on here. Hopefully I'll be back on another Monday soon. And yeah, like we said, we got lots of great things. We got water futures on the NQH2O index with our friends at NASDAQ launching on December 7th. We're still focused on building out the VOLQ market. Micro options and micro futures are continuing to be on a tear here, and I think that's a great thing to watch as we see some of this index divergence in performance around the news this week. And as we get some legislative clarity, we'll see things like sectors continuing to rotate. So I think great comments by our the other folks on the show today. And, as I always say, Mark, just when we think we're done, I'm sure something else will be on the horizon, but lots to keep us busy right now.
And, I'm going to cheat here, Tim, for a second, because I have a crypto show coming up in about an hour exactly on the network. I think we have a question for that one, which is along the lines of, is CME going to launch anything in the ETH realm anytime soon? So I'm going to cheat right now, Tim, make you answer that one, because you're not going to be with me on that program. Any interest, any plans, any insight into what's cooking over there on an ETH perspective at CME, Tim?
No, I mean, Bitcoin futures and Bitcoin options keeping us busy, certainly with some of that price action. I mean, certainly Ether dollar sees some interesting price action. So we're all ears. We have the Ether US dollar reference rate out there right now, and that's our focus in the Ether space. But keep those questions and those suggestions coming. We're all about customer demand for developing and deploying new futures. So keep it coming.
There you go, Tim. Always helping me to answer questions on multiple shows. I appreciate that. You know where to go to learn more about all things CME has cooking. CMEgroup.com is the place. Of course, if you want to check out the reports we do for our show every Thursday, they're available throughout the week completely for free. CMEgroup.com/TWIFO, TWIFO, or /TWIO is the place to go. Those work all day long, so you can check whatever product you want any time of day or night, and you get a live report. And, of course, you know where to go to learn about all things VOLQ, NASDAQ.com/VOLQ, VOLQ. It's pretty easy, pretty simple, pretty straightforward. Head on over there, kick the tires and light the fires, and maybe you start slinging the futures over there at CME Group. And Mr. Uncle Mike, if folks are intrigued, they want someone maybe to hold their hands managing some of their vertical put spreads right now, or anything else going on in these topsy-turvy markets, where should they go? What should they do?
StCharlesWealth.com if you're looking for a financial advisor. who has a lot of involvement in the option product, similar features as any other financial advisor, but I look at options. Feel free to contact me, stcharleswealth.com.
All right, and last but not least, Mr. Meatball, they don't want to go to Texas, I'm sure, for the internet, it sounds like, but they want to check out all this cool stuff you're talking about with the Robinhood and with the smaller names and what the Robinhood legions are up to. Maybe they have more questions like Luigi did about what the heck VIX actually is. Where should they go? What should they do?
Yeah, just go to optionpit.com and check out our blog and sign up. We've got all kinds of content we put out all the time. We put out a blog on VIX and volatility almost every day, a couple of ones on general trading, and even Alicia is writing profits and pumps now. You can subscribe for that now, and you can get some kick-in trades from profits and pumps.
Profits and pumps?
Get it? Yes. Well, Alicia used to have to wear heels on floor, so she decided to call it profits and pumps, since that was what she did when she was on a badge in the 90s.
How comfortable that must have been. Check them out over there in the land of the pit, optionpit.com, to learn more. And on behalf of the greasiest of meatballs and the unklest of Mikes and Tim and everybody over there at CME Land, and indeed myself, I want to thank all of you out there for downloading, streaming, subscribing, for listening live, for sending in such great questions. We'll get to a bunch more of your questions on Thursday. Don't you worry. If you need more live in your ear holes, don't you worry. We'll be back in exactly an hour for the Crypto Rundown. You already heard and answered one of those questions out there. And we'll be back again tomorrow for all the interview fun you've come to know and love. I think maybe the advisor's option sneaking in there as well. Education Wednesday, of course, got your double shot on there. And then we're back again on Thursday with another episode of The Option Block.
The Option Block is brought to you by NASDAQ. From its inception, NASDAQ has been an innovator and agent of change in the financial markets. It's in our DNA. From the development of electronic trading to our drive to bring enhanced functionality and world-leading technology to our suite of 6 options exchanges, we exemplify customer focus, consistent technology, and streamlined solutions. Now NASDAQ is proud to launch the NASDAQ 100 Volatility Index, ticker symbol VOLQ, to its suite of exchange indexes. VOLQ uses only at-the-money options to provide a precise measure of NASDAQ 100 volatility. Learn more about this exciting new volatility product at www.nasdaq.com/VOLQ. NASDAQ, leading the U.S. options market and continually rewriting tomorrow. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.